Internalising risk is a huge part of any asset class, and property is no exception. And with so much uncertainty around today, especially with a potential Brexit on the horizon, what does this mean for the property market? With me to discuss is John Hill of Valiant Capital. Well, John, it's great to have you with us today.
Thank you for having me.
Well, first off, since the beginning of 2016, markets have been so volatile. There's been so much uncertainty. So how does this translate in the property market?
There's certainly enough indicators for people to be very cautious and vigilant to what the potential impacts of staying in the EU or leaving the EU. There's also to consider one of the biggest factors is interest rate rises. So depending on how people have acquired or financed their property, adjustments potentially could be quite detrimental to the property prices.
Absolutely, and in fact, people are saying rates will probably rise later this year. And are people already starting to panic about their mortgages, how they'll pay them back, or do you think people haven't actually considered that yet?
Well, you'd hope that a few lessons had been learnt from 2008, but looking at the world the way it is, we're led by people that think borrowing your way out of the problem is a good solution. I'm not one of them, but depending on how people have financed those assets, yes, you've got to look at the yield and the parameters of what you can tolerate if there's an adjustment in either property value or yields.
Absolutely. And the big story at the moment is, of course, a Brexit. So whether you're in or out, how is this impacting prices?
Well, I mean, there's an awful lot of scaremongering that goes on out there. It's the million-dollar question of what would happen, what will happen. I'm certainly with Boris on this one. It's about, I think, putting a more stable, forward-looking environment in place for the UK, which property prices will probably be affected by that in a negative sense.
We're almost seeing this already, especially in the high end of the market, over 1 million properties in London. That sort of market's gone a bit stagnant at the moment, waiting to see what will happen for the Brexit. And also, I know building has also slowed down a little bit. But what I don't understand is that a lot of people who are buying these sorts of properties aren't necessarily from Europe. You have a lot of investors coming in from China and the Middle East. So for the high-end property market, will it be an issue if we did leave?
Well, I think you've always got to look at the high-end property market. How does it affect you? I mean, I'm not out there buying £1 million houses, so looking in the space where the entry-level marketplace, I think there's always going to be a good demand. Getting the fundamentals right about location and all of the positioning that good property needs, but also how you finance it is critically important. You have to look at if these things happened, if you didn't have tenants, if you had to find the capital to service any debt that you've got on that property for a year or two, can you do it? The long term is things come down, they will go back up. Certainly at the moment people do need to be, I think, frightfully cautious of, there's going to be an adjustment. And we've had quite a lot of growth, so it would be my thinking that the adjustment would probably be south, not north.
Absolutely. Well, looking at property as an asset class, it's kind of a strange beast almost, because when it comes to risk, it does seem to be more safe and people are happy to invest. So you don't really see prices, altering that much.
I think you have to be cautious that they might. Certainly, if we do leave the EU, I would expect 5 to 10% as an adjustment, negative off of the physical real estate values. But at the same time, it's technical financing that has always been the issue and how an individual's done it. I mean, property throughout the long-term view, it's a tangible, solid asset that's there. But it's critically important that people are very sure on what they're acquiring and how on a bad day that's going to work for them and to be able to accommodate that.
So investors, it's still good to have it as part of their portfolio moving forwards.
It's the only thing I deal with, property. So it's the approach that's important and how you prepare yourself for any change.
Super. John, thank you.
Thank you very much.
Well, that was John Hill talking about how a potential Brexit could impact property prices.